Today's guest is Jonathan Ankney, who is a small business CFO. He helps people focus on the numbers. Welcome to Richer Soul, Life Beyond Money, the last baby step. Imagine it's 12 months from now, and you've achieved your major life goals. How does it feel to be in the best shape of your life? To wake up energized, excited about the day? What's it like to have great relationships and friends who support you and propel you forward? How does it feel to have an excess of money to be able to make the choices you want? To be fearless and open to trying new adventures. Imagine being connected to the universe and it providing everything you desire. It's possible over time, and your past does not dictate your future. The only thing holding you back from this vision is you. It's time to take control of our thoughts and use them to our advantage. I help people live the life of their dreams and bring balance to health, wealth, relationships, time, and spirituality. And you can see how on richersoul.com by looking under the coaching call tab to hear actual coaching sessions. If you haven't listened to episodes 1 through 9, I encourage you to go back and listen to the framework behind Richer Soul and how to create the life of your dreams. It's simpler than you can imagine. You can also find all the show notes for this episode on the website. I've started to send out a monthly email, and you can also sign up while you're there. In the short monthly email, I'll share the best articles of the month, let you know about upcoming episodes, and share a little wisdom I learned this month. This past month, I talked about taxes, and since it's almost tax day, I want to rant a little. Too often people are focused on the wrong number. When you go to the store and you buy something for $80 and you hand the person a $100 bill, do you do the happy dance when they hand you $20 back? No. Why? Because it's your money. And yet, when you get a refund on your federal or state taxes, you somehow think it's found money? It's not. It's yours, and you really need to focus on your tax bill. How much did you really pay in federal, state, local, FICA, real estate, and other taxes? What can you do to lower that overall tax bill? In our house, taxes are by far the number one expense we face, even more than when we had a mortgage on the house. Even in our real estate business, taxes are the number one expense. Focus on what's important with the numbers, not on the change you receive. Do you feel comfortable with your financial plan? Would you like a second set of eyes to look it over and make sure you're not missing anything? Someone who won't sell you stuff you don't need? If you'd like a second opinion on your financial plans, or you're worried that you're missing something, check out the SWOT analysis, strengths, weaknesses, opportunities, and threats at richersoul.com/SWOT. Today's guest is Jonathan Ankney, who works with service business entrepreneurs to help them grow their business by giving them clarity about what the numbers reveal about how their business is doing and partnering with their owners as the chief financial officer. His work includes preparing and interpreting financial reports to make informed decisions, setting up tailored financial systems to meet the business's needs, training staff and owners on how to use the systems for consistent and accurate results, and relieving the owners of the minute and boring details of making finance work smoothly. Jonathan also runs a financial education blog at yourmoneyandyourbusiness.com with videos, documents, and training courses to help businesses become more profitable, as well as explain financial tools and concepts in non-technical language. Tapping into this journey from a musician to financial executive to bridge the gap for his audience. He is especially passionate about keeping the focus on everyone and every financial activity on profitability instead of taxes. He's an active Toastmaster, an avid bicyclist, and serves both the vestry and finance committee of the parish of Calvary St. George in Manhattan. He graduated from Binghamton University in 1994 with an MBA in Finance and Arts Administration. Let's meet Jonathan. Welcome to Rich Your Soul, Jonathan Ankney. It's great to have you join us today.
Thank you, Rocky. I'm so glad to be here talking to you today.
Always a pleasure. We like to start at the beginning. What was it like when you were growing up, and how much did your family and school teach you about money?
That is a really great and deep question. I think that I'll answer the easy part first. My school didn't teach me anything, but my parents, on the other hand, did teach me things, not necessarily through what they taught in words. I think that it was more by way of example. Well, I suppose some of it would be words. In thinking about the lessons, I think that the first thing that they taught, in both by example and by word, was they said to me, 10% of what you make goes back to God. And so that was a regular lesson, and it was something that was instructed verbally. I think that I also learned from them to worry a lot about money. There was a lot of fretting. I think part of that comes from the fact that I grew up in a household where both parents grew up during the Depression. And I think that was about it. The other thing is that, and this was just kind of an interesting observation on my part, but I kind of felt like that there was a part of the environment that I grew up in kind of looked to wealth as being something to want to achieve, but at the same time, partly because of the religious values, I think that it was something to be avoided too. So maybe it's a private matter, we don't want to be too wealthy, that type of thing.
It's surprising because this is the psychology people do not talk about much, is these behavioral attitudes towards money and how they sometimes can prevent us from the success we want to achieve. And I've heard many stories from people who, when their bank accounts get too big, literally force themselves to blow the money because they feel bad becoming rich.
Indeed. As I've been introspective about thinking about my past and what I was taught about money, and now in my work as a CFO for small businesses, I've been asking myself, what's the money mindset that people have? There's an interesting book that I read recently called Mind Over Money. It's written by a father and son team. They're psychologists, and they talk about just the lessons that we learned in youth about money. And two of the key points that I took away from this were they first talk about the flashpoints in our lives. And the flashpoint is when an event has happened, or let's say a series of events happen, where imprinted on your mind is, oh, this is the way money works. I'll pull out an example here. A poor family has been wronged by a wealthier family. The couple's talking, and one spouse says to the other in front of the child, well, we shouldn't be surprised. After all, they're a wealthier family, and rich people don't know how to be considerate. And so the child grows up with this mentality that, oh, rich people are inconsiderate. I shouldn't be surprised if I'm wronged by someone who's richer than I am. Or they may end up a mentality of, I don't want to become rich, or I don't want to become wealthy, because that means that I will become inconsiderate. Or alternatively, they may grow up saying, you know what? People with a lot of money have the power. I want that power. And the interesting thing about the book is it talks about the scripts that people develop about money in their minds, and they say, listen, you can have two children that grew up in the same family with the same circumstances, but they end up with different perspectives and different behaviors as adults because each interpreted the event differently or they applied it differently in their lives.
We're getting into some pretty deep psychology that goes across much more than money, and it's pretty neat. From what my understanding is, these imprints tend to occur between about the ages of 5 and 13. Parents need to be careful of not so much even what they're saying, but what they're doing, because you are imprinting these beliefs into your kids. And as you said, each kid, through their own lens, can view it differently. I think that's important for adults to look at. When you look at a situation, you're looking at it through your lens. You could be sitting right next to a family member who's looking at it through their lens, which is completely different. So the same types of events get looked at so differently. And that's why we need to sometimes separate ourselves from the feelings of the events and to look at an event objectively.
Indeed.
So we started off very deep up front. So I will check out that book. It seems very interesting. I know there's a ton of books that talk about those money mindsets and where they come from and how they prevent you from success later on in life. And until you go back and revisit where that lens was created, it's very difficult to change it.
Absolutely. I completely agree. To me, it's interesting as I advance in life, just being able to look back at things that happened and then asking myself, what is the reality of what was going on at that time? I know what I saw, but was that the complete truth? Is that the complete picture? How can I change my mindset? This is not just about monetary wealth, but just to become a more fulfilled human being and greater, and not letting these things that happened in the past hold me back from reaching the full potential.
Absolutely. And we talk about that in the opening monologue, is your past does not dictate your future. And the only thing preventing you from success in your future is that reflection in the mirror. Nobody else.
Indeed.
So you have lots of nieces and nephews. What are you doing to teach them about the right mindsets and about money so that they don't have to walk around with all this baggage?
Well, I feel convicted by the question because the reality is that I haven't done anything yet. So I feel prompted to take action on this. I think that there are a couple of things that I would like to do for my nephews and nieces. One of them is just to have some basic conversations about money and to help them understand how it works. I approach it from a very business-like standpoint. So just being able to convey to them, hey, as you grow up, my oldest niece is going to turn 13 this April, so she's at the right age. Caroline, in a few years, you're going to be entering into college. You need to be thinking about how you're going to make money and how you're going to spend it. And you're going to be thinking about college and start to think about where you want to go to college in terms of an investment. College is an investment. We put money into an education. What comes out? We want the best return on investment, so the better the education you can get for your dollar dictates how well you're going to be able to make money in your career. And I've also thought about writing a book, more like a letter. There's a nephew that I have specifically in mind who I think would be headed towards business. Even though he's pretty young, I think that he has that disposition. And I thought about just writing a series of letters to him that he might not necessarily appreciate now, but when he gets older and can understand them better, just to have him be able to read them and say, look, Jacob, this is how money works. This is how people work. This is how the whole system works together.
Nobody teaches us about that at all.
Indeed. I would say that in reflecting on my past growing up and just what I see when I talk to people is there's a lack of intentionality about money, that we kind of on an autopilot.
I would agree with that. People just tend to kind of get into the drift and they follow that instead of being intentional and purposeful and know where they're going and what they want. Because this question comes up a lot. How much should I put in my 529s and when should I start? And I've always said to people, nothing. If a kid is smart enough to go to college, a kid should be smart enough to figure out how to pay for college. When you just hand them the money, it takes all the intentionality out of it. It becomes an expectation. That creates a whole nother set of arguments and issues. Whereas when you expect your 18-year-old to be a man or woman and figure out their life, it's a much better place to be in. Now, that's not to say you shouldn't save. You can take all the money you're going to put in the 529 and set it aside yourself, and that gives you the flexibility at the time of college to make the choices you want based on where you are in life and based on how your kid is doing. But it gives you a lot more flexibility.
That's an excellent point. I'm trying to recall the last time that I spoke to someone who said to me that they actually expected their child to pay for their own education. When I was growing up, that was the expectation, or at least that the child was expected to put in some for the education.
I've told my kids, get to hustling. You got to figure this out. And we're in the midst of this. My daughter's a senior. She's got her first round of scholarships. She's going through her interviews for her second round of scholarships that will allow her, if she gets them, she gets pretty close to a full ride. In the meantime, she's working on outside scholarships, and she's also getting college credits prior to college, so she lessens the amount of time that she will be in college.
That is excellent. By way of background, I actually have a music degree, and originally I got an MBA in Finance and Arts Administration for my graduate degree once I figured out that being a musician didn't pay off very well. But, this is part of the money conversation, or the lack of money conversation, is that my parents didn't sit down with me to say, you have choices about what you can do. This was a very religious family. It was a very musical family, and so I implanted in my brain were ideas about what I was supposed to do and sort of use the word destiny, what I'm destined to do. And looking back on it, a great conversation would have gone something like this. Jonathan, you have a mind that could take you a number of different ways. You have a personality that likes certain things. So let's talk about what you're good at doing, and let's talk about what you like to do, and figure out where those intersect, and then talk about some of the different vocations that you could actually do. And by the way, why don't you take a minor in music, since that is an interest of yours?
And those are kind of the conversations I'm having with my kids. They're each different. They each have their own talents. We're having those types of conversations. This is what people aren't talking about. We have seen dramatic change over the last probably 10, 20, 30 years, and the rate of change is accelerating. And if you go for a degree in a specific area that's highly specialized, it may become somewhat irrelevant in the future as jobs become irrelevant. And I don't mean that jobs are irrelevant, but the particular field goes away. For example, a telephone operator no longer exists. These types of jobs are going away. New jobs are being created. What I'm seeing, especially with my son, who's more of a STEM kid, is the colleges aren't even keeping up on being able to teach to the level of change that's going on with regard. They're just getting 3D printers. They're just doing a lot of these types of things that have just come to be, so to speak. And so it's better to learn certain principles and certain ideals that will carry you forward regardless of what happens in the job market.
Makes a lot of sense.
So it's been hard, and we've been working through it.
Sure.
You work a lot with small businesses, and clearly small business is a great way to build wealth. And yet also I see within the small business world, a lot of businesses go out of business. And I'm thinking a lot of them go out of business, especially early on, because they don't manage their money well. What kinds of things have you seen with small business owners and their relationships with money?
To start off with, I think that what I see a lot is that the personality of the business owner oftentimes becomes the personality of the business. And what disciplines they bring as an individual into the business becomes the disciplines of the business. And the non-disciplines, places where they're relaxed or really indifferent in their personal lives, tend to show up in the business as well. And I think that there are three areas, possibly a fourth, but there are three areas that I typically see businesses to begin with. So we'll say, I'm trying to remember who wrote there's someone who writes great sales books, and he uses like the 9.5 ways to sell this or to do that. So I'm going to give 3.5 things that I observe. One is that there are some sort of numbers issues with the business owner. Either they're uncomfortable talking about numbers, that they're uncomfortable looking at numbers, they're just not mathematically inclined, or they feel that they're too busy to look at their numbers. Then there's what I say are mama bear and papa bear issues with their systems and processes. Either they become very hung up on creating systems and processes and kind of missing the point about the purpose of them, or they don't care about the systems and processes altogether. That can actually lead to issues like fraud because they're relaxed about that. And then the third thing to say is that their financial hygiene tends to be poor. There are certain things that need to happen at certain times financially in terms of habits that needs to be developed and practiced. Then, the other thing that I was going to mention is that there are times when business owners they're what we say are undercapitalized. In some ways, that goes back to the numbers issue, because they're undercapitalized, which means they didn't have enough money at the beginning of the business. Therefore, they're always struggling with cash issues, and every dollar that comes in goes out right away to pay a vendor. And that's because they weren't intentional about what is my plan and what is the startup budget looking like, and if I don't achieve this level of numbers, then how much more money am I going to need, or what is my plan B if such and such contract doesn't work out?
So when you talk to businesses, what percent of business owners do you think are good with the money, have the right systems in place, do the right things when they're supposed to, and are properly capitalized?
I won't hazard a specific number, but it tends to be very low. Rarely do I come into a situation where I'm looking at the business owner and saying, wow, you have things lined up the way they need to be lined up. You have the right attitude. You have the right practices into place. And therefore, you just need me to continue to do reviews, monthly reviews of your books to make sure that they're accurate and that we're having a conversation about what to do next. Oftentimes, when I go into a business, what I will see is, this is a service I offer, is I'll say, just let me take a look at your QuickBooks. QuickBooks is the most frequently used software package for accounting in small business. And I'll say, let me look at your QuickBooks. So they get me the backup or they give me access to their online account, depending on the version they use. And I see things like unreconciled checks or deposits from 3 years ago. I look at their accounts receivable reports, and it shows that someone owes them money that they never collected or that it didn't get reported properly. Just a number of different issues that are there that weren't handled because the bookkeeping was incorrect. Or I'll talk to business and I'll say, well, let's talk about your budget. Well, they don't have a budget. Well, what's your working capital, which is a little bit more than cash. The formula is a little bit more than cash, but just basically, what do you have to work with in terms of money? And they don't know. So there's almost always something that I find when I talk to a small business owner that needs to be improved in their business.
How many of them focus on their profit first and make sure that they pay themselves profit first?
That's also very low. They're often living from either check to check in terms of the contracts with their clients, or they're living from check to check in terms of their own business, how much draw they're able to take out.
This was a big aha for me. I always thought business owners understood their business and knew their numbers and understood them. And I've come to realize not that long ago, actually, that is not the case, that it is far from the norm, and it's actually abnormal that they do this. I'm wondering how, and I think I know why. It's because most business owners love what they do. So it's what they bring to the business. That's the thing that they love the most, and so that's what they focus on. If you look at people in general, we don't focus on our money. We're not taught about money, and we've got all these bad money habits, and they bring it to their business as well. And so I guess it starts to make sense.
I agree. So I live in New York City. Sometimes as I look at people jaywalking across the street looking at their phones and, taxi drivers and all other kinds of drivers driving around them, I'm surprised that the city has not killed itself. And likewise, there are times when I look at businesses and wonder how they survived. And I think that part of it is that at the end of the day, a lot of small business owners they're very good at scrambling and hustling and being able to respond to the immediate moment. But if we want to live what I call the entrepreneurial lifestyle, the lifestyle where the business has reached a point where the owner doesn't need to be working on it day to day, that they don't need to be involved in day to day, then it's going to require some planning. And part of that is to become skilled in finances. I think that and you've talked about this. People like to do what they like to do. They like to, if it's, let's say, a carpet installer, the person likes to be making the sale and out in the field and making those installations. If it is a caterer, they got started because they liked cooking. But there's a point where the small business owner needs to become the CEO and make that transition. And a key part of that transition is to learn the core skills that are needed for a person to be a CEO. So they no longer become a tradesperson, but they become a CEO, and they're looking at financials and how do my finances work? How does marketing work for my business? What's the sales process look like for my business? How does the IT department run for my business? So even though they don't necessarily need to do these things themselves, they need to be well-versed enough to have conversations with the people who are doing those things for them.
That comes back to the question of, are you running a business or are you creating a job for yourself?
Indeed.
And those are
I agree. Yeah.
two very separate things. So if you want to create a job, great. Just understand that if you've created a job, you're not going to have probably as much financial success as you might think you could, or you could if you had looked at this differently. So what's the first step? What do we do first? We walk into someone and they don't have their systems in place. What's the first step?
The first step oftentimes for me is to actually fix their books, to make sure that their QuickBooks is set up in a way that they can understand how they're doing financially and that they make it a practice to look at them. It's interesting because I just had a conversation today with someone in California whose books needs to be fixed up a bit. And what I said to her, the way I described it was, I said, a lot of times people don't want to look at their numbers, in part because their numbers aren't presented to them in a way that they understand them. And the analogy that I used there was, I described it as eating healthy. A lot of people don't want to eat healthy because the food doesn't taste good. But if they eat food that was grown properly and harvested at the right time and came from the grocery store that had a good produce section, then the food tastes better, and then they feel better about eating healthier food. So likewise, if we have financials that are presented in a way that we understand, then they make more sense, and we have these aha moments where it's like, oh, wow, I didn't realize that I was spending this kind of money on X. Or I didn't see that the opportunity was there for doing more business with client Y. It starts by helping them understand their numbers, and to do that oftentimes requires a reconfiguration for their general ledger system. And the thing is this, I would say, Rocky, is, I know you're an accountant too. There are certain rules that we need to live in terms of accounting, but there's still a lot of flexibility in terms of how we present the numbers internally to the business owner.
Can you give me an example of that?
Certainly. I do a lot of church work, nonprofit work, but especially with churches. And let's say that I have two churches. We'll say that they're in the same business. And the one church is a more contemporary church. They rent a school auditorium every Sunday for their services. Because they're contemporary, they tend to appeal to a younger crowd, so they hire a band to go up and play. Then we have another church that is, let's say, 150 years old. They own the property. They are more liturgical, so that they're doing the communion or the Eucharist every week. They might have a soup kitchen or some sort of program that reaches out to the poor and disadvantaged in the community. So you have these two churches. Their profit and loss reports are going to look different. The young church will not have the property expense that the old church will have, because they're renting. They will have a band expense. They will not have the communion or Eucharistic wine and elements that the old church has. In the meantime, the old church has property maintenance that they have to be concerned about. They might have a different staff. They have these different liturgical supplies, the candles, the incense, all of these different things. And so even though they are part of the same faith, the conversations with the minister or the administrative pastor and the boards are going to be different, and they're going to be presented different financials that, while they follow the same accounting rules, are presented differently because they understand their ministries differently.
That's very insightful. I'm wondering, when do people finally say, I give up, I need help? Is it usually too late, or when is that turning point when people say, I don't get these numbers, I want someone to help me? Or is there a control issue there too, mindset-wise, where I can't trust somebody to do this?
I'm trying to think back. I've been in business for over a decade now. I don't recall that anybody has ever said to me, I can't trust anyone. I have had conversations with people where they say, I have my CPA doing things and that's it. And my question to them, and the answer varies sometimes, but my question to them is, well, you have a CPA doing it, and oftentimes that means the tax preparation. And so my question to them is, are your financials being made to benefit the tax preparer and the IRS, or are they being made to give you more information so that you can make informed decisions about your business?
I'm guessing most people who have an accountant are doing it for tax purposes and for payroll, and not to better understand their business.
That is the case, yes. That is the case. I think that when people come to me, I don't advertise, so it's at least so far. So it's been by word of mouth. And oftentimes it is just a general, I don't think anyone's ever come to me out of desperation. Occasionally people come to me with desperation because they have a hot issue that's come up. They get an IRS letter or something like that. But for the most part, it's just that there's an underlying discontentment with how things are going. And they say, I know something's wrong, but I can't put my finger on it.
And that makes sense.
Certainly, yeah. And then we go in and we take a look. I mean, I have one client, I've had her for about 10 years, and she said to me, I can't tell you what the problem is. She said, I know that my bookkeeper is doing things wrong. And when I looked at her financials, I said, well, one problem is that your bookkeeper decided to create an income account for every one of your clients. And I said, it's made your income account very long, and now you have 2 pages of income accounts, and you get lost in all of these details when you only need one income account or a few income accounts, and then we can go look at another report just to find out how much did you sell for each client.
That was kind of step 2, is creating the proper systems that are appropriate for the business, that don't become so taxing that they become overwhelming, and also that they don't capture enough so that you have clarity.
That's an excellent point. I think that one of the key principles that I have when I approach financial reporting for clients is that we want to look at the whole forest first. And then, depending on what we view from the tower that we're looking from, we go to one part of the forest because we notice that things are blossoming so wonderfully that we have to understand what's going right in this area. Or we may see that there's a dry patch somewhere else, so we go there. So 2 primary reports are the balance sheet and the profit and loss statement. The balance sheet, which is basically the net worth statement for the business, and the profit and loss that says how are we making money and how are we spending it on a monthly basis. The cash flow statement, which is the 3rd report, as you know, I typically don't worry about, because in my thinking, the cash flow that I want to be looking at is the future cash flow. So we prepare a cash flow forecast to figure out, okay, what kind of money do we have now? What are we collecting in receivables? What do we owe that we're going to be paying out right away? And then what are, on a weekly or monthly basis, how is this going to fall out in terms of what we're collecting from clients and spending? But we start with the balance sheet and the profit and loss statement. And from there are a lot of supplemental reports in QuickBooks that we can go to get the breakdowns. So we don't have to have 2 pages of income lines. We can have several income lines, and then we can go to another report to say, what is my revenue per client? How much money am I making per item that I'm selling or service that I'm selling? And we go into these supplemental reports to inform us further as we go from that big picture into the details. And you're right, it is a process, because we want to have that regular habit of going in, and probably monthly, say the middle of the month after the bookkeeper has done all of their work and someone's reviewed it, then to go into the reports and say, now that we've closed out the prior month, let's find out what our performance was. How are we doing against budget? Are we making as much money as we thought, or are we making less? What's our next? And we start asking questions. We ask questions that have numerical answers to them.
Then it's no longer an opinion, it's a fact, because we have numbers to back up what it is, and we're not looking at something through a particular lens.
Exactly. I'll say to clients or to prospective clients, I'll say, look, I know that you have an intuitive feel about how your business is doing, but we need to either confirm that opinion or we need to contradict it, find out what's really going on. But there is an underlying numerical truth to what you're seeing.
How often do you find that the 80-20 rule applies and that 80% of the profit is coming from 20% of either the sales or clients?
I think...
And I guess it depends on the type of business.
It does depend on the type of business. I think that might be skewed a little bit much for businesses. It's probably more like a 60-40 or 70-30 type thing. So the balance is a little bit off, but it is true. And I've seen it in some of my clients. I've seen it in terms of myself, that there are times, and it's easy to happen, because at least I typically work with a lot of service businesses. So you get your service business that's growing more than the others, and so there's just a tendency to kind of ride along with that and to work with them. So it definitely does happen, but at the same time, part of the reason why people should be in business for themselves is that it diversifies their income. And when you get to a point where several clients or several product lines and becoming a key part of your income, the diversification is no longer there. And all it takes is for a new technology or for one bad lawsuit for your client to kind of blow that out of the water.
That is very true. And that's true in life as well. So I'm going to take a slight step back, because I talk about balance sheets and cash flow for people as well. And the same principles that apply to creating profit in business apply to creating profit in your life. You should create your balance sheet and you should create your statement of cash flows, so you know where you're at. You can figure out from where you're at where you need to go to be financially independent, and you can use your cash flow to determine if your money's being spent in places that make you happy, or in a business in places that create more revenue for you versus creating losses. So we've got systems in place now, and then we kind of move on to the third step, which is the financial practices, which is, how do you put processes or systems in place to look at what's going on? I mean, we could create the perfect accounting spreadsheet and we can make sure it's all running properly, but if we don't look at it and we don't analyze it, then it's all for naught.
Definitely. The financial processes and the financial habits that we establish are certainly going to vary between businesses. And there was something that I was thinking of recently, a video that I was actually put together for my blog, where I talk about the spiral method of learning. When I was a trumpet player, I lived in Philadelphia, and I was in the youth orchestra there, and we had it was the principal trumpet player of the Philadelphia Orchestra, talked about the spiral of learning. And he said, when you're first starting out, you're at the ground level. And when you're at the ground level, you have to address these different areas of your skills, of your trumpet playing skills. So your embouchure development, which is your lip strength, your breathing skills, your tonguing skills, how you attack the note, your fingering skills, and your musicianship. So after you cover all of those, you kind of go to the next step, and then you address each of these again. But we weren't technologically savvy back when he was talking about this, but it's almost like you're going to version 2.0 of each of the skills. And then you get more sophisticated, and you get to version 3.0 of the skills, and you're able to hold more air, and you're able to reach higher notes because your lip strength is much greater. And I think that the same is true of businesses, and is part of the reason why some businesses get out of kilter with their financial systems and their financial habits. So what I mean by that is that they end up with, let's say they have a really good product and they have a really good way of selling it, but they're still relying on a cigar box to keep their money in. There's a part of their business that has not grown along with the business. So we want, as part of raising up the whole business, is to improve that weak link, which unfortunately oftentimes is the financial side of it. So we want to create the systems that say, okay, your expense accounting, it used to be okay that your expense accounting was done by hand on a sheet of paper and handed in. We can't do that anymore. Now it has to be done in a spreadsheet, and it has to have a second signature for review before it gets to the business owner. And so we want that. We want to increase those as the business matures, and not in terms of age, but in terms of complexity. Then we want the financial hygiene to be there, the habits to be there, to say, all right, we know that every day, let's just say that a business has reached the point where it has a full-time bookkeeper. Every day the bookkeeper is going to do these things. And every day when the bookkeeper does these things, let's say, for instance, that it cuts checks, that they're put in front of the business owner for final review before sending them out. We want to make sure, as part of the habits, that the business owner has a day of the week or a certain time of the week when they are looking at their financial reports. So there are different things that need to happen at different times and with regularity, so that the business has disciplines that it's implementing in the business to make sure that things are happening financially.
That might be one area where people struggle. They do struggle to let go of control, and they're afraid. And this allows you to have your bookkeeper do the work, but you still stay in control. You still can make sure that you're the one signing checks or approving payments, so that things are not happening under your nose. And it doesn't surprise me. I know people running 8-figure businesses that their finances are still, they're being run like it's a little teeny business, and it's a multi-million-dollar business. And it's amazing.
Well, the unfortunate thing is that those types of environments lead to opportunity for fraud. Not that we automatically assume that it's happening, but it's something to watch out for, because if suddenly people are seeing money that are flowing through the business, and a couple $100 a week wouldn't be missed. Well, that adds up after a while. My own approach to working with businesses, after I redo the QuickBooks in a way that makes sense to them, is I like to understand what the process is for taking care of the different types of transactions. When a person, and the question that I'll ask the owner is, when a person runs a credit card charge, what is the next step in the process? How does it reach QuickBooks? How do you look at the credit card statement? How do you review it? Questions like that. When you invoice a client, what's the process for making sure that it's done right? When the money is received, what's done with it? So we outline these processes. Again, it doesn't have to be complex, but it still needs to be done. And then the next step beyond that is, okay, we've established it. Now we need to have training. And I typically do video training with clients. So when I do video training, it's not me in front of a camera, but I will actually have the computer screen up in front of me, and I will record what the entry is supposed to be in QuickBooks and explain the steps, both the rationale for the steps, because it helps people to understand what that rationale is for why they do what they do, and the actual execution of this step itself. And that ends up being a permanent part of their training archive then for whoever's in the business, because hopefully it's going to grow and they start saying, well, no longer is one bookkeeper enough. We need to have an accounts receivable clerk and we have to have a payroll/disbursements clerk.
And as you grow, your systems grow more complex. And as you build wealth, your systems become more complex. And so you have to be able to handle that. Just out of curiosity, how often do you see small business owners commingle their personal and business finances, creating even more issues?
It probably doesn't happen as often as one might expect in terms of percentage of businesses that I see doing it. But when it happens, it really does create a problem, because unthreading that and figuring it out is a real challenge. And I just, for anyone who has a business that's listening right now, the thing I would say is make sure that you have, if you're going to sign up for a credit card under your personal name, but use it for business expenses, use it exclusively for business expenses and don't commingle. It's possible to keep track of it, but it does make it much more difficult for whoever's doing the bookkeeping.
When that occurs, you miss all the tax deductions, which means you're paying a severe penalty for missing out on all those deductions you should have had.
That is true, or conversely, you end up claiming personal expenses as deductions, and if you're ever audited...
now you're in trouble.
Exactly.
And so these systems apply regardless of the type of business, whether it's for-profit, non-profit, or if it's just yourself, or even if you have a small side business or you're doing rental real estate. Business is business, and money is money, and the principles are the same across the board.
Rocky, that is so absolutely true. I was talking with someone recently, and I said, we even sometimes refer to ourselves as corporations, Rocky Inc. or Jonathan Inc. I have the business of being myself. And the principles still apply. The more valuable skills that I bring to the workplace, the higher I'm going to get paid. The better I market myself. I mean, I'm sure that many people have seen friends, they're like, wow, that person just really doesn't quite seem to have their act together. But man, they land the right jobs. Well, chances are they're a good marketer. And that's what helps them make money.
Absolutely. Are there any areas that we have not talked about that we should touch on today?
Well, we've covered a great deal of ground. There is one thing that I want to append to the conversation here about business finances and personal finances, and that is that one of the recommendations I make to people, or if they're in business or if they're, let's say, a nonprofit executive, I say, look, if you really want to understand your finances better, start by understanding your personal finances better. Then apply these same principles to your business or to your nonprofit environment. Because I think people tend to have, because they're closer to their personal money, that's where they tend to learn it first. And by understanding, well, what does my personal balance sheet look like? Well, they can apply that same concept to the business or to the organizational balance sheet. There was a TV program a number of years ago, and all of a sudden, I can't remember what it was, the name of it, but the gentleman was the head of the household for a governor, and the governor had said to him, Benson was the name of the show. And the governor said to Benson, you could be the state treasurer. And this Benson said, no, I can't. I just run a small budget. And the governor said to him, listen, it's the same thing. You just add a bunch of zeros.
Very true. And you know what? In this, I'm going to put links back into the balance sheet and the cash flow. They are more designed for personal finance, but if you get the concepts, you can even run them for your business as well. Just to remind people that understanding where you are and where your money is going is important. And so I'll make sure that there's links in the show notes for that so that people can take some action on this and maybe start putting those in for themselves.
Excellent.
Let's just take a slight turn here. You've talked a lot about your upbringing and spirituality, and it sounds like you're also involved in churches and helping them with money. If you don't mind, personally, how has spirituality helped you to achieve the life you want to live?
this is how much time do we have again? No, I won't force the answer to that question. Spirituality has been an interesting topic for me. I did grow up in a very religious household, and I would say that I have always believed in the core tenets of the faith. But I think that one of the things that happens with very religious families at times is that they tend to come with rules that aren't necessarily, I would say rules that aren't necessarily a part of the core faith, but have sort of been imposed on the faith. Rules and regulations of what we can do, what we can't do, for example. And I think that that's one of the reasons why a lot of young people, when they get to college, begin to go out and try different things or reject that faith. And I wouldn't say that I rejected. I wasn't like that. I continued to go to church all throughout my time, but it was a real challenge for me to understand where the rules and regulations ended that were handed to me by my parents. And Rocky, there's a wonderful book. Are you familiar with Richard Rohr, Father Richard?
I am not.
Oh, just a wonderful author, amazing insights into life and spirituality. Wrote an excellent book called Falling Upward, and he talks about the two halves of life. And one of the things he talks about is he says, the first part of life is learning about the rules. The second part of life is learning why we have the rules and the principles behind them, and why, I'm going to paraphrase here, I don't know if he would approve of me saying it this way or not, but why they should be broken. Because the true faith is not about the rules, it's about the rule maker.
Okay. This is one of the things I have noticed considerably. There are God rules, and then there's all the rules that people made up that they believe that are just not there. And so that sounds like what you've experienced. And then I know for kids, they can see hypocrisy quite well. And so when you don't follow the rules, I think they tend to walk away. At the end of the day, though, it seems like it's more about the spirit than about the law. Are you doing things for the right reasons and with the right purpose and with the right spirit more so than anything else? And I don't know if that's kind of what he meant by what he said in his book.
I would certainly say so. I would say for people who are Christians, in some ways, you can look at the two halves of the Bible. I mean, they're not evenly divided halves, but the one is about the law and the other one is about the grace and love.
That's more, I think, what it should be about, is learning to live with love and grace and to respect other people and their opinions and not to put your particular views on someone else, because we're all looking at things through quite a different lens.
That's especially true as we become a more interconnected world, and certainly I live in New York City where people are just from all over the world and have different faiths or have converted to different faiths. And I think that when I meet someone who is of different faith, but they hold to the same belief system of that there is a creator, that there is an ethic that we live by, that there is a dignity to every human being, and that therefore they're entitled to certain rights, there's just a mutual appreciation, I think, for that.
I agree. That's very true. As we wrap up here, if people would like to find you and learn more about what you have to offer, what is the best way for them to connect?
I have a website for my service business, the outsourced CFO business. That is sbcfo.com, short for Small Business Chief Financial Officer. And then I also run an education blog at yourmoneyandyourbusiness.com. Again, that's yourmoneyandyourbusiness.com. And, we've talked about different things here on the call. And so if they go to that website /Richer Soul, I will have links and information just to give a listener an opportunity to follow up and learn a little bit more about the things that we've talked about.
That's awesome. Thank you so much for doing that and for sharing. And I encourage people who are listening to check it out and continue to improve yourself and improve your knowledge and every day take a little step forward. Thank you so much for joining us today, Jonathan.
Thank you, Rocky. It has been so much fun just talking about these different topics with you.
Have a great day.
You too.
I encourage you to check out Jonathan's site, sbcfo.com. That's Small Business CFO. And also his other site where he has the special page for us, yourmoneyandyourbusiness.com/richer soul. Focusing on the numbers in your personal and business life is important if you want financial freedom. Take the time to do so. Today's action step: create your balance sheet and your profit and loss and cash flow statements. I'm going to put links in the show notes for creating a balance sheet and for creating a personal cash flow statement. If you need help with these, please email me. If you have questions about how to create your own, just email me. I'd be happy to help you out. Clearly, where you focus your attention is where you get results. Is there someone you know who could benefit from what we talked about today? Please share, as it helps to build your social capital and create better relationships and start better conversations with the people you know. They'll appreciate you for it. What's preventing you from moving forward, and who are you putting on your team to help build the life you deserve? Taking no action creates a far worse outcome in life than trying something and failing. Can I help you achieve your goals? Just email me, and we can start with a short chat to see if we're a good fit. Thanks for listening. You can always get me at rocky@richersoul.com. I'd love to hear how you're doing and how the information I've shared has helped you. Thanks for listening. Have an abundant week.